Welcome back. Well, as promised, let's get in Shivangi Sarda of Motilal Oswal for a technical check on the markets. Hi, Shivangi. Good morning. Good to see you win. What's your take in terms of the Nifty's move? The problem is the up move is good. It's good to see. But sustaining this is going to be challenging because the markets are in the bear grip. Do you think that we're trying to form some sort of a bottom closer around the 200 EMA and maybe we could, see a near-term rally?
Morning, Nigel. Thank you for having me and welcome back, Mangalam. So we've seen that, of course, the markets have witnessed some sort of recovery today, and while it might feel like a dead cat bounce, but we are still holding about 24,500, which is a plus. So of course, we are seeing that some of the broad-based market buying interest can be emerging in the sector-specific action, which is holding the entire market today. But this actually needs to hold above, 24,650 for the next leg of rally to commence after the 6 days of weakness that we've seen recently, because it's already given up the gains of the August month, and we're back to, where we were standing at the start of August. So overall, we are seeing that some sort of capped upside will remain, but then multiple attempts of recovery are being made, which is a positive for here. So we could, for the meanwhile, go with buy on decline strategy, but then again, 24,650 is the next cap that we're looking at, and the next hurdle at 24,800 marks. Of course, with the support of 24,350 levels. Talking about Bank Nifty, we've seen that some of the NBFC space stocks are holding up this index. Of course, there has been major underperformance here as compared to the broader market, and we've seen consistently downtrend in this index from the last 9 weeks. So this index is going to take a little more strength as compared to the Nifty index, and we are expecting some range-bound move over here with capped upside. And we're looking at levels as 54,500 as the cap on the upside, with the support of 53,350 levels on the downside.
All right. What about individual stocks? Shivangi, what do you have on your list today?
So individual stock-specific action, first up on my radar is Dixon Technologies, that has resiliently stayed at the higher zones from the last 5 weeks. We've seen a consolidative band, which it has respected. Recently, from the last 3 days, we're seeing volumes are above average, and it is re-attempting to cross the previous hurdle of 17,300 levels as well. So, of course, RSI is showing a good positive divergence here with good amount of open interest addition here as well as we commence in the September series. So this one's looking quite positive with the next support of, with the next target of around 17,850 levels and a support of, 16,800 zones. And the second one on my radar is Exide. Of course, there is a lot of sector tailwind happening here ahead of the festivity that you mentioned earlier. And, seasonality-wise, these quarters tend to be quite good for this entire sector. Exide has seen a price volume surge today. The consolidation breakout of the last, 16 weeks, which is quite a good risk-reward over here. So recommending a buy here. Now, the next targets that we're looking at for Exide is 420 levels with a support of 398.
All right. Take that point, Shivangi. Thank you so much for joining in and giving us your views on the index and